Zebec network is one of the most discussed projects in the entire crypto space right now. The price is going up, but the question is, how much longer can it go up? Who is buying here? Who's selling here? Is this short-term manipulation or is there actual long-term accumulation happening? Let's have a look at the on-chain data, the data most people ignore. Now, 3 days ago, I've already published a video on the token. And there's no surprise, that video outperformed the average. So there is a lot of attention on the token. The video got 67% more views than the average video. We are currently at 0.55 cents and the price more than 4x'd in the last month. But how much higher can we go? On-chain, we've got almost 65,000 holders. And in the last 24 hours, we saw 3,500 wallets interacting with the token. There are roughly double as many buyers than sellers. So the price continues to rise. Now, with 200,000 tokens, a wallet holds roughly $1,000 worth of the token now. And that's what's shown on the left. So the retail investor is acquiring the token at very quick rates. So out of the 65,000 holders, almost 9,000 holders have $1,000 worth of the token. Now in the middle, we've got the wallets that have at least 2 million tokens. So that's now $10,000 worth of the token. We can see how in the last few days, this did not go up anymore. So for some reason, the somewhat larger wallets start to take profit. Now on the right side, we've got the people with $100,000 worth of the token. That peaked on the 24th of May, so 5 days ago, at 245 wallets. It's now at 217 wallets. So the whales, they start selling. But of course, as long as retail is buying enough, the price can continue to go up. Now, there's not just the trading volume on the Solana chain. Actually, most of the spot trading happens already on centralized exchanges. That's led by Gate.io with 29 million of trading volume in the last 24 hours. There's also the perpetual futures market with 45 million of trading volume on Bybit. And so let's have a look at that in more detail. Now, the perpetual futures market is the market of short-term capital. It's the capital that goes in and out of tokens frequently. It's the capital that get exposed to the token with leverage. Now, perpetual futures are bets on the price, and we can bet in either direction. We can bet up or we can bet down. We can go long or we can go short. And when enough people bet on falling prices, when enough people are short, and sometimes the market makers that hold a lot of the token might pump up the price. They might short squeeze that speculative money. And I think that is what's going on with Zebec. Because have a look at the funding rate of the token. Most of the time it's negative, and this is not usual for the market. Usually it costs money to get positive price exposure to an asset. Normally the longs have to pay the shorts in order to bet more on rising prices. But for Zebec, most of the time the shorts have to pay the longs. So it costs money to bet on falling prices. We also see how there's massive increased open interest. So that means how many bets are there actually on the price? Now have a look at this closely. The open interest is in green. The spot price is in yellow. When open interest is going up, so when there's more and more bets on the price, the spot price tends to rise as well. As there's less bets on the price, the spot price tends to follow as well afterwards. The spot price tends to trickle down. So just have a look at what happened at the end of February. The open interest crashed, and then subsequently the following days, the ZBCN price also went down and got closer to open interest again. Now recently we see a massive increase of open interest one more time. And of course, the arbitrage bots with the spot market balance out those bets and adjust the spot price as well. So this is a leverage-driven rally. Too many people are betting on falling prices. And so when a rally like this happens, those people get liquidated. The market makers that buy up more and more of the token, they might benefit from the liquidation fees, and they might also benefit from all of that short interest suddenly exiting the market, pushing the price even further. So that's a classical short squeeze, and a short squeeze will deflate at some point. But why are there so many people betting on falling prices? It's probably the tokenomics. Over time, there will be more and more tokens that hit the market, and if the demand doesn't grow as quickly as the supply, then in theory the price should go down. And so that's why people bet on falling prices. But now there's so many people betting on falling prices that the market makers push up the price, and that short squeeze attracts also retail that accumulates the token more and more. This, I think, what's going on mechanically. The whales are starting to take profit. They are anticipating that at some point the open interest will go down and that the short squeeze will end. But small retail, of course, tends to be slower, and they tend to get wrecked. they continue to buy in very heavily. At some point, this will turn around. The whales tend to make the better calls than small retail. Here's Zebec relative to Solana, where the token is listed. It's at an all-time high. Initially, it underperformed Solana. No surprise here because of the expanding supply. But since the end of January, we see our occasional short squeezes. Currently, we are in one. The market cap is still comparatively small with 400 million. It's still easy to push the price around. After we reach 1 billion, 1.5 billion, it's going to be harder for the market makers, because then it really takes a lot of money to push the price further and induce those squeezes. What we see over here is a list of tokens surrounding the RWA, the real world asset narrative. So seeing Zebec and 1 billion is definitely possible. At 1.5 probably as well. We're likely not going to go above 2 billion. At those kind of levels, manipulation becomes extremely expensive. Here's a comparison with DePIN. Again, Zebec is at roughly 400 million. There are larger DePIN projects. But is Zebec going to beat Render and go above 2 billion? Or will it make another 5x and reach 2.5 cents? I don't think so. Can it reach 1 cent? Yes, definitely. Can it reach 1.5 cents? Potentially. At 2 cents, the air is getting thin. But again, the best indication is to just look at open interest. When that goes down sharply, it makes sense to exit very quickly. Now, the vast majority of people in crypto approach the market in the wrong way. Most people try to find those multiple X returns. They try to find the few assets that make outsized win. But this is clearly a game against the odds. Most altcoins tend to go down massively. A 70% decline over here, another 80% over here. It's all double-digit losses. Now, the common counter argument is that maybe we don't just buy 1 or 2 altcoins, maybe we buy multiple and then we might get that high flyer as well. But the problem is that diversification, so spreading the risk across various assets, does not work with altcoins. Everybody can launch an altcoin. Everybody can increase the supply as they want. And so in aggregate, the altcoins tend to do worse compared to Bitcoin and Ethereum over the long term. What we've got over here is the others dominance. So how much of all of crypto is in the altcoins that are not in the top 10? And 3.5 years ago, this was still at 19%. Now it's below 8%. So had you invested in a broadly diversified basket of altcoins, you would have on average underperformed the market by 60%. Instead of trying to find the needle in the haystack and most likely lose, at least in the long term, isn't it better to try to get the odds in our favor? If most things don't perform that well compared to Bitcoin and Ethereum, if a lot of altcoins inflate in supply over time, so supply grows faster than the demand, then why don't we bet on relative valuations? It's a bit more complex of a game, but I believe that this added complexity does help. We want to make our investing as simple as possible, but not simpler than that. And so here I am doing something differently to most other YouTubers. Most crypto YouTubers, they just show one single win. They say, here, I made some money over there. Just trust me, bro. Very few are willing to share their trading history. Now, here's my trading history on Hyperliquid. This is where I started trading decentralized perpetual futures. This is the profit and loss. And the maximum drawdown was only 5.1%. Now, obviously, I'm not going to share my positions open here on YouTube. That's part of the premium membership. It's down below. It's thebitcoinstrategy.com. Now, the issue with trying to pick the winners is, of course, that we have a very low chance of succeeding. But the beauty of crypto is that it's still an incredibly inefficient market. People always say that capital markets are efficient, but in the end, it's the people that make it efficient. So if you know more than the average market participant, if you do more research than most people, if you're part of a group of people that do more research than the average market participant, then we can win. Then we are the people that make the market efficient, then we are the ones that make the profit. For example, this here. This is pure inefficiency. This chart shows the balancer token relative to Ethereum. A very constant underperformance. And we can make money from that underperformance. As the price is going down, we are printing money. Yes, we are betting on falling prices. And yes, this might be a bit more scary at first if you don't know what you're doing, if you haven't yet learned about this whole topic. But the risk is every now and then a potential short-term pump, again, when we bet on falling prices. But the reward is a very long-term constant trend. We can also turn this chart around. So this is now Ethereum relative to Balancer. So basically buying this when we long one asset and short the other. So the inefficiencies are not necessarily that obvious in the macro, as in the market is expanding and contracting in a way that's not that predictable. But the relative valuations are much more predictable. The risk to reward in a chart like this is quite obvious, isn't it? People make all kinds of mistakes. People, for example, also just leave their stable coins in their wallet. Right? Let's say you trade actively, you've got some stable coins, and you don't use this for anything to add some additional return. That's also a mistake. For example, here we can get 15% APR by providing liquidity to Hyperliquid, the largest decentralized perpetual futures exchange. It's comparatively safe. It's definitely worth the risk for 15% APY. And so this is then the feedback that I get in the chats. It was the first nice trade. Thanks, Gerhard. And over here, a few more positive trades, etc. And people make their money back very quickly. Premium has already paid for itself. And yes, if you've only got a few $100s in crypto, this is probably not worth it. But if you're investing several thousands of dollars and you're still inefficient in your trading, if you still hope for your one altcoin to outperform, it probably makes sense to learn a bit more. And this is what I mean by learning. I've published more than 100 tutorial videos on various topics within crypto, on how to use relative valuation bets, on how to manage risk, on how to do on-chain analytics. Feel free to binge watch all of this. And of course, I'm also sharing my own trade. So for example, here is a trade opened on the 30th of April. And here's then how I closed this 5 days later. Yes, this is only a single example, but that's why I showed the overall portfolio chart before, right? This one over here. And so feel free to check it out. It's currently $125 per month. It used to be 165 when everybody was super hyped about crypto. Currently, the attention on crypto is rather low, and so the price is also lower. If you lock in that price now, you will not be affected by the price increase that might happen once the market picks up again. So everybody that signs up locks in their current rate. If it's your first time here, feel free to subscribe. I publish here regularly. Like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. There should be somewhere a card over here. You can just click on that and it will lead you directly to the sign up page. So see you over there as well. Cheers.